Welcome to the Cyber Career Lab. The Cyber Career Lab was created for people who can't afford thousands of dollars for degree programs or certification training. If you've been paying attention to the news recently, a few training organizations are in a negative light because of things that are going on, and it reinforces what we're doing here at CLASS-LLC to make sure that everybody, regardless of where they are or what their budget is, has the best access to the best content at no cost whatsoever. By pairing hour-long engaging sessions with great instructors and guest lecturers, we have succeeded in creating a valuable experience for all experience levels. One of the things that you'll find is that although we target early and entry-level career professionals, the content that we're providing is going to be valuable for everybody. The idea is that if you're at the beginning of your career and we present executive level content, it allows you to shape the right ideas and the right perspective that's going to lead to your success in the cybersecurity profession. Our weekly lessons and the support from our online community are designed to equip all participants to continue growing in critical cybersecurity knowledge and to keep pace with an ever-changing profession. It is my honor for this session to welcome back Malcolm Harkins as our featured guest lecturer. And before he begins, I have a few items to help everybody wrap their mind around an important topic for the industry. For today's session, as you saw on the title slide, we're talking about cyber insurance. In a lot of cases, if you do certification training, or if you read the news, or if you go to a marketing session from an insurance company, they're going to tell you that cyber insurance is the best answer to close some of the holes or the gaps that you have within your organization, but it tends to misrepresent the challenge and the issue that we're facing and the solution that cyber insurance solves in the context of your risk management program. In reality, if you take cyber out of the equation and you just look at insurance, the purpose of insurance is to provide a business with a form of protection against possible risk. So we're talking about insurance in this conversation because this is a risk management conversation, but insurance is a part of the equation, not the entire solution. Cyber insurance is meant ultimately to protect the organization against large financial losses. It is not a replacement for good practices or good controls. In most cases, insurance is meant to kick in and provide additional coverage when you've done everything right and something still goes wrong. Most of your cyber insurance is going to help reduce the financial impact of fines and fees associated with a data breach or a major incident. Your insurance is going to provide funding for emergency response to a breach or to an incident. For example, when the city of Atlanta had their cyber attack, insurance helped cover the cost of forensic analysis and root cause analysis that made sure, as part of the cleanup effort, they also removed what led to the ransomware in the first place. Your cyber insurance is also going to support third-party vendor indemnification if it's necessary. It helps defer the cost resulting from loss of productivity or revenue from operations. Sometimes it's a customer requirement. And so just like you have professional liability insurance or general liability insurance, some types of organizations are required to have cyber insurance so that they can do business and provide the services that they offer to their customers. Now, most people are familiar with car insurance. Your car insurance doesn't cover the cost of basic things that you're responsible for, and that's the context and the idea that you want to keep in mind for cyber insurance. Your car insurance is there to help you restore your car or replace your car after an accident. It's not there to provide tune-ups, to provide oil changes. You don't call your car insurance company when you need a car wash or other basic maintenance. Insurance is for extreme and novel circumstances, not for everyday things that are under your control. And so with this in mind, before we turn it over to Malcolm to share his ideas, please consider the list of important things related to cyber insurance broadly. One, your insurance company is only going to cover what is explicitly documented in your policy and nothing more. And so if you don't read the contract, if you don't understand the contract, if you don't understand what's excluded, you could potentially end up paying significant amounts of money for coverage that doesn't meet the needs that you have within your organization. Few companies have an insurance attorney review the policy. I went to an online session today that was talking about cyber insurance, and the premise that was proposed in that conversation was that the business needs to bring technology and security people to the table to review the policy, but there is a much different understanding about the legalese and the requirements related to insurance when an insurance attorney is looking at the policy and understanding what is covered, what is not covered, and what your responsibilities are, versus unexperienced or uneducated security people or technology people that don't have the same background. So in many cases, bringing the wrong people to the table to review the policy leads organizations to sign policies that they don't really understand. Most policies fail to define diligence. And so the interpretation of diligence from your company's perspective about what you need to do and how far you need to go and the level of effort that needs to be provided is often different than the perspective that the insurance company has. At the end of the day, the only perspective that matters is the insurance company's, unless you're prepared to fight the insurance company in court. Diligence must be defined and agreed upon before signing the policy. And now we're back to having an insurance attorney explain to you what are you signing up for and what are the expectations that contribute to your claim being covered and contribute to the results that you're looking for being produced. The scope of your insurance is also going to be an important consideration. Your policy should be written to state that only material assets are in scope for coverage of the insurance policy. A statement like this is very important because what was affected and how you provide for what was not affected is going to be an important consideration. Having an insurance policy that is broad and non-specific could lead you to have higher premiums. It could lead it to be more expensive. It could lead you to be exposed to many more exclusions that you otherwise wouldn't encounter because you have a policy that covers everything, and a policy that covers everything often isn't going to do exactly what you need it to do for the organization. Which leads us to the idea of definitions. And so if we're going to find a cyber insurance policy working with the right insurance company that is narrow enough in scope to cover exactly what we understand, we also want to make sure that your cyber insurance policy has definitions that everybody recognizes. Depending on where you go in the world, the word event or the word incident or the word breach or the word ransomware are going to have different understandings from all the parties involved. And when you're dealing with insurance, the only understanding that really matters is what your insurance company understands. And so I might be a privacy professional that considers a breach to be unauthorized access or disclosure of personal information, but what is going to matter for the policy coverage and what's excluded and what is included in the scope of the policy really comes down to what the insurance company says and how they define things and how they understand the diligence that I've applied to putting controls in place to prevent this thing from happening so that everything that I need is actually covered. The contents of the policy and the coverage also matter. The liability covered is a concern. Again, the level of diligence that the insurance company is expecting and how they define and measure that all are going to be components that influence the final results when you have an incident or you have a breach and you file a claim and you expect the insurance company to cover what is promised in the policy as it's written. Now, in a lot of cases, as I talk to and Malcolm talks to and other security professionals talk to the insurance companies, the status and the maturity of your security program often has a huge influence. If you think about it in terms of life insurance, if I decide today as a 40-year-old person, 40-something-year-old, we won't give the exact number because I don't want you to feel positive or negative or deal with ageism. But if you think about any age bracket, you know, your 30s, your 40s, your 50s, your 60s, there are different risk ratings for people at different ages based on their behavior. And so if I decided to sign up for health insurance, or I decided to sign up for a life insurance policy, they're going to send a medical professional to my house, or I'm going to go to an office. I'm going to get my height, my weight, submit lab samples. All of those things are helping the health insurance or the life insurance company identify what is my risk. If I'm a smoker, my risk is greater, so my policy is going to be more expensive. If I drink more than 5 glasses of wine a day, that's going to put me in a different risk pool than somebody who drinks no wine a day because there are diseases or consequences or outcomes that are associated with behavior. That same idea that applies to life insurance or to health insurance or even car insurance where your insurance is more expensive the more accidents you have, or your insurance is more expensive related to the number of claims that you've had in a time period. Insurance companies are not in business to pay out claims. They're in business to stay in business. And so they're going to put you in a higher risk pool that has a higher risk rating, that has a higher cost associated with it. So taking the time to make sure that you have a good program in place allows you to answer yes to all of those boxes on your risk questionnaire. And the more yeses that you answer, the lower risk you have, which ultimately has an impact on your insurance premium. Similarly, you can't just talk to your friends or read in the Wall Street Journal about what your insurance should cost. It often varies widely based on the type of industry that you're in and the inherent risk that applies to the industry that we're concerned with. As an example, healthcare organizations are exposed to a different type of risk than a manufacturing organization, or a global organization has different risk than a small business based in Atlanta, or a small business based in California, or a small business based in Timbuktu. It doesn't really matter, but for industries and locations, there is always some nuance or factor that the actuarial scientists have considered, which represents the risk based on the factors affecting the organization. With all of that said, and with your primer on insurance, so that you understand the fundamentals and the basics, there was a great article that Malcolm commented on this morning that puts us in a good position for this conversation, where SC Magazine noted that the rise of cyber insurance has largely failed to promote better cybersecurity practices among the industries that they cover. And this was in a new report that was released Monday from the British security think tank RUSI. So I want to make sure I give credit to the author, especially considering some plagiarism things that are going on in the world. And if you are interested in the story itself, I have high regard for SC Magazine. They have great authors, they do great stories, and a direct link to the story is available using the link. With that, I'll turn it over to Malcolm to kind of help us explore the topic and have a better understanding of some of the concerns.
Yeah, thanks, Keyaan. And like you said, I saw this morning, and I posted a quick comment and things on LinkedIn, basically saying I would not have thought that cyber insurance would have led to security. So this is puzzling that people had believed that, basically, what others think. And I posted that, I don't know, 6:30 something California time. By 10 a.m. California time, so within 3 hours, I had over 3,000 people's eyeballs on it, dozens of comments, and a few forwards. So it's definitely a hot topic, and so it's timely for this dialogue with the Career Lab. And I think Keyaan did a great job of explaining the broad nature of insurance and what it does and what it doesn't do. Now, I'll make some comments, but I also don't want to throw the baby out with the bathwater. So, but let me just start in the cybersecurity insurance space, at least as I've seen it now for its emergence over the past couple decades. And one of the first insurance events I spoke at, believe it or not, was probably 12 to 15 years ago. Lloyd's of London, the big kind of insurance aggregator, they have these 360-degree events where they talk about different areas of risk concern. And so their first cybersecurity 360 event was in San Francisco years ago, and I spoke at it. And that was, I'd say, in the really early days of this type of stuff. And it's still a little bit of the wild, wild west when it comes to cybersecurity. Versus casualty and property insurance and other things. And so you've got to put it in the context of that and what it, as Ken mentioned, what it really does. And then go back to some of the things that we've discussed before around managing risk, right? Risk is a function of three things: threat, vulnerability, consequence. Our job managing security, the only controllable variable in that equation is how vulnerable we are. That is the only thing that we can control. The threat actor and threat agent, we have no ability to affect. Consequence or impact is what it is based upon, your dependence upon technology. Now, when you get into the consequence, one of the consequences is financial impacts. And this is where, again, as Keyaan mentioned, insurance can play in mitigating some of the financial implications of an event, whether it be a physical event, a logical event, but it really does not do anything to address how vulnerable I am, right? I could build a building that's susceptible to an earthquake. Well, I might have insurance to mitigate it, and I might pay a high premium because I'm below earthquake standards. Doesn't mitigate that the building is vulnerable to a 7.0 earthquake, right? It's the same thing when it comes to cyber security and cybersecurity insurance. It only provides some level of partial and limited financial payment back to the company to mitigate losses. But that doesn't necessarily also negate the consequences beyond the business to your customers. We've talked, before in some things about the societal implications of the cyber risk. Again, if there was a loss of life, yeah, somebody's family might get, some payment, but that doesn't mitigate the consequence that somebody was harmed, right? Even if they didn't lose life, but they were injured in some way. So again, think about cyber insurance the same way. Now the other aspect of this that's kind of interesting, and Keyaan touched on this when he gets to premiums, and this is where I'll flip it around and go, there could be the opportunity for insurance to lead to better security.